Have you ever hit submit on your tax return, felt that huge wave of relief, and then, just seconds later, that little knot of dread in your stomach? You are definitely not alone. Today, we're pulling back the curtain on the security checks HMRC really does after you file. This important discussion is brought to you by the experts at Pro Tax Accountant, so let's get right into what they're actually looking for.
So, picture this. Let's meet Alex. He's a freelance designer based in London. He's just spent hours, maybe days, getting all his accounts in order. He finally hits that submit button and leans back, ready to relax. But then, that little thought creeps in. Is some faceless person at HMRC about to rip this whole thing to shreds? That feeling, right there, is exactly what we're going to clear up today.
Here's how we're going to break it all down. First up, we'll uncover the incredibly powerful system HMRC uses to monitor, well, pretty much everything. Then, we'll look at the top triggers that get a tax return flagged in the first place. We'll even walk you through what a real HMRC inquiry looks and feels like. And most importantly, we'll give you a simple checklist to stay compliant and finish up with how getting expert help can be your absolute best defense. So stick with me, and by the end of this, you'll know exactly how to handle this stuff with confidence.
Right, so how does HMRC actually check millions and millions of tax returns every year? If you're picturing thousands of auditors hunched over desks in a massive office, you can forget it. The reality is, it's all down to a single, unbelievably powerful piece of technology.
It's called Connect. It was launched way back in 2010, and it's a super sophisticated data analytics platform. You should think of it as HMRC's own digital detective. Its one and only job is to hoover up and analyze huge amounts of information from all over the place to spot any inconsistencies or gaps in what you've told them. And it's working away quietly in the background 24/7, connecting all the dots. And the scale of this operation, it's just staggering. Connect sifts through over 1 billion individual pieces of data. That's billion with a B. It uses artificial intelligence and complex algorithms to connect all these dots and build a really detailed financial picture of every single taxpayer in the UK.
So you're probably wondering, where does it get all this data? This is where it gets really eye-opening. Connect pulls information from hundreds of sources. Of course, it talks to all the UK banks, but it also has access to your overseas bank accounts. It sees property sales from the land registry and that rental income you get from Airbnb. Remember our designer, Alex? That new car he bought? Yep, the DVLA records are fed right in. His little side hustle on Etsy? Connect sees the data from online marketplaces and payment systems like Stripe. It can even scan social media and look at company ownership details. It is incredibly comprehensive.
And this right here is the key takeaway. Over 90% of all HMRC investigations are triggered automatically by this software. The old idea of just getting a random audit, that's now just a tiny slice of the pie. If HMRC comes knocking on your door, you can be almost certain it's because Connect found something that just doesn't add up. Okay, so Connect has this absolute mountain of data. But what is it that makes it stop and flag your tax return specifically? Let's dive into the biggest red flags that can trigger an investigation, and you'll want to pay close attention here because one of these might just surprise you. The entire system is built to spot anything unusual. Let's go back to Alex. If he earns, say, £120,000 one year and then just $25,000 the next, Connect will flag that as an inconsistency. Or if he's working from his home office but claims £10,000 in travel expenses, well, that's another red flag. The system also pays way closer attention to cash-heavy businesses, like plumbers or market traders. But the number one trigger? Mismatched records. Simple as that. If the income you declare doesn't perfectly match what your bank or your clients have reported, the system will catch it every time. Now, here's something that's not about algorithms at all. While Connect drives the vast majority of inquiries, HMRC still relies on good old-fashioned tip-offs. In a single recent tax year, they got over 120,000 reports from informants. And these could be anyone, disgruntled ex-employees, former partners, anyone with knowledge of undeclared income. It's just a little reminder that the system has human eyes on it too. Okay, so let's imagine the worst has happened, and your return has been flagged. You get that dreaded brown envelope in the mail. What happens next? Well, an inquiry isn't necessarily a total catastrophe, especially if you understand the process and you're prepared. So let's walk through it together. First things first, you need to know there are two main types of inquiry. The most common is called an aspect inquiry. This is where HMRC is just questioning one specific part of your return. So, for example, they might just want to see the receipts for that big travel expense claim. A full inquiry, on the other hand, is much more serious. This is a complete top-to-bottom investigation into every part of your business and personal finances because they suspect something is seriously wrong. The process itself usually follows a pretty clear path. First, you'll get a formal inquiry notice in the post. And here's a key point. HMRC generally only has 12 months from the day you file your return to open a routine inquiry. Next, they'll send an information request, where they'll ask for specific documents, bank statements, invoices, receipts, anything to back up your figures. Step 3 is the review. This is where HMRC officers compare your records against all their data, and that process can take anywhere from 3 months to a whole year. And finally, you get the decision. Either the inquiry is closed with no changes, or you get a bill for unpaid tax, plus interest and penalties.
And those penalties can be really severe. It all depends on your behavior. A genuine, careless mistake could cost you up to 30% of the unpaid tax. But if they find you deliberately understated your income, that penalty can jump all the way to 70%. And if you actively tried to conceal it, you could be facing a penalty of 100%, which means you pay the tax you owe and then you pay it all over again as a fine.
All right, I know that all sounds a bit scary. But here's the good news. Avoiding an investigation is entirely possible. So let's pivot to the empowering part, your proactive compliance checklist. These are the simple steps you can take to keep your tax affairs clean and stay well off HMRC's radar.
These are the golden rules, really. First, keep absolutely immaculate records. Using accounting software like QuickBooks or Xero makes a massive difference. Second, disclose all of your income. Your main job, any freelance work, rental income, all of it. Third, separate your business and personal finances. Get a dedicated business bank account. Fourth, be realistic with your expenses. The rule is simple. Only claim for things that are wholly and exclusively for your business. And finally, file on time. That January 31st online deadline is non-negotiable. Filing late is an immediate red flag that suggests you might be disorganized.
And that point about record keeping, it's not just a friendly suggestion, it's a legal requirement. HMRC can ask to see your financial records going back up to 6 years. And if you can't produce them, you can be fined up to £3,000 just for having poor records, even if your tax return was actually correct.
And this isn't just about how things are now. A huge change is on the horizon. From April 2026, a new system called Making Tax Digital becomes mandatory for self-employed people and landlords earning over £50,000. This means you will be legally required to keep digital records and submit tax update every quarter. The old annual tax return is being phased out, so getting comfortable with digital bookkeeping right now is absolutely essential.
This brings us to our final section. Look, you can do everything right, but let's be honest. Tax is complicated. Sometimes the very best defense against making mistakes and attracting unwanted attention is having a professional in your corner.
You know, this quote really hits the nail on the head. A lot of people see an accountant as just another expense, but it's much better to think of them as an investment. A good accountant gives you strategic advice, they find legitimate tax savings you might have missed, and most importantly, they make sure you are bulletproof from a legal standpoint. The peace of mind that comes with that is just invaluable.
So if anything we've talked about today has made you feel a bit uncertain, or you're just looking for that peace of mind, the best thing you can do is seek professional advice. For expert guidance on your self-assessment, you can get in touch with the team at ProTax Accountant. You can reach them on WhatsApp or by phone at 07985 689 912, or you can just drop them an email at info@protaxaccountant.co.uk.
Then hey, if you found this discussion useful, please do subscribe to the Pro Tax Accountant channel on YouTube. They are regularly posting clear, practical tax advice just like this to help you manage your finances and stay on the right side of HMRC.
So, I'll leave you with this final thought. Now that you know how HMRC's digital detective works, if it knocked on your door tomorrow, would your records be ready? Are they clean enough to pass the test without a second glance? The answer to that question really will determine whether your next tax submission is a moment of relief or the start of a very long conversation. Thanks so much for joining me.